Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. In this video, we'll be going over a convergent trading glossary term, one-time framing. So what is one-time framing and how can we identify it in the market? One-time framing is a way to describe how the auction is trending over two or more bars. It can help us to identify which side is winning the battle in the market. So are buyers or sellers currently in control? For a market to be one-time framing up, each successive bar must have a higher low than the bar directly preceding it. This can be some sort of consolidation where the market's not making new highs. As long as that higher low is remaining intact, the one-time framing up is still valid. One-time framing down occurs when the high of each successive bar is lower than the high of the bar directly preceding it. There does not have to be a lower low for one-time framing down to remain valid. The concept of one-time framing can be applied to bars of any periodicity, but it's traditionally used when referring to 30-minute, daily, or weekly bars. First, let's start with one-time framing up. Here we have a daily chart, although the concept can be applied to any periodicity. Our one-time framing up begins on our first higher low here, and as you can see on the subsequent bars, they do not necessarily need to have a higher high. The higher low just needs to remain intact. So as we proceed along these bars, each consecutive low is a higher low, and that's how we know that the one-time framing is still occurring. Finally, we get to this bar here where the one-time framing ends as the low of the preceding bar has been violated. One-time framing really helps us to have confidence in the trend of the particular time frame that we are looking at. So in this case, we were looking at daily bars. So you see several days buyers were in control of this market. And even though the one-time framing ended on this bar here, it doesn't necessarily mean that the trend is over or that we can expect a reversal. It simply tells us that the momentum for the buyers in this time frame has been shifted. Next, let's take a look at one-time framing down. Here we have a 30-minute chart. And if we take a look here toward the center of our screen, we can see that one-time framing down begins on a lower high, and each subsequent bar here has a lower high. And for one-time framing to remain valid, the bars do not need to form a lower low. They only need to remain at or below the previous bar's high. As we progress here to the low of this chart, the first bar to form a new higher high is the one that breaks the one-time framing. It's important to note when using one-time framing that the context of the periodicity is very important. A market could be one-time framing down on a 1-minute chart while simultaneously one-time framing up on the daily chart. So when discussing one-time framing, traders need to be very clear about the periodicity that they're examining. If you've enjoyed this video, subscribe to our channel and enable post notifications to receive more just like it. And consider becoming a member to see what we have to offer at the Convergent Trading community.